viewers, you are watching the Savera and I am Manpreet Kaur. Precious metal markets have been roller coasting lately, with gold prices swinging sharply, rising to record levels one moment to correcting steeping the next. This has raised questions among investors and everyday buyers alike. Today, Union Finance Minister Nirmala Sitharaman addresses these movements and offered insights into what's driving this volatility. Let's take a closer look at the key factors behind the fluctuating gold markets and what the government sees as underlying causes. According to FM Sitharaman, one of the primary reasons for sharp swings in gold prices is global uncertainty, which has spooked investors and triggered heightened demand for the yellow metal. As geopolitical tension, economic disruptions, and unpredictable trade development persist worldwide, Investors have increasingly shifted funds into safe havens assessed like gold, a traditional store of value in times of stress. This surge in demand reflects underlying nervousness in financial market, where confidence in any single currency appears shaky. Sitharaman explained that gold's recent volatility reflects a lack of confidence in major currencies, leading both individuals, investors, and central banks to purchase gold as an alternative. When countries and investors doubt the stability of currencies, especially the US dollar, which gold is globally priced in, demand for bullion rises, sending prices higher. Central banks themselves have been net buyers of gold, adding structural supports to its price and contributing to volatility as they diversify reversals. Another factors highlighted by analysis is the profit bookings and technical market behaviors that follows periods of strong price rallies. After gold surged to multi-year highs, many market participants looked in gains, triggering selling pressures that pushed price lower in recent session. Margin requirement increases by exchanges such as the Chicago Mercantile Exchange have also added pressures by forcing traders to post more funds to maintain positions, leading some to liquidate their holdings. These technical elements can amplify price swings even in the absence of fundamental news. Gold's relationship with the US dollars and interest rates also plays a critical role. When the dollar weakens, gold becomes relatively cheaper for holders of other currencies, supporting higher prices. Controversially, strength in the dollars, often influenced by monetary policy expectations, can dampen gold demands and lead to pullbacks. Real interest rates or yield adjustments for inflation influence the opportunity cost of holding a non-yielding asset like gold. Lower real yield typically supports bullions, which higher yields reduce its appeal. In the Indian context, swings in gold price tends to feel more pronounced due to local factors, including the rupee's movement against the dollar and the import dynamics. Because India imports most of its gold, a weakened rupee adds to the domestic rupee price even if international rates remain flat. Seasonal demand such as for festivals and weddings can also accentuate price movements locally. Sitharaman's comments come amid broader discussion on economic and fiscal stability following the recent union budget. While the government has introduced reforms aimed at sustainable growth and investment, external pressures such as global trades, tensions, and currency volatility continues to affect commodity markets. The finance minister reiterated that these swings are less about domestic policy and more about global financial uncertainty and investor behavior. That's all for now. Stay tuned with us for more updates. Do like, comment, and subscribe our channel.